From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
The 11th of the 11th, and this is the COB. I'm Nadine Blaney. Nice to be here with you. Let's get across where the Cboe Australia Index has closed. We are past 4 p.m. here in Sydney, and it is, down quite significantly, off by 0.6%. Mostly because we're seeing metals just absolutely get hammered. A lot of disappointment. They're calling it yet another fizzle coming from China in terms of stimulus. Now, I've read some analysis that perhaps China and Chinese authorities would like to keep a bit of powder dry until they know exactly how any potential Trump tariffs will impact, the global economy. But we will see. Remains to be seen. All I know is one of our three themes is iron ouch, because iron ore, really is getting battered today. And that's why we have the likes of, BHP, when I look at the market map, off by 4.3%. Fortescue, off by 7% today. Rio, down by 3.8%. Those are really steep falls coming through for those miners. Now, we've also got to continue to think about these Trump trades. It's not just Bitcoin. It's not just record highs being set in U.S. equities. It's Chinese semiconductors. So they're doing really well today on, the thematic that likely they'll have to reshore, bring their production back home. So Chinese chip makers having a good day. And they won't be able to sell into the U.S. likely. And we've also got the Treasurer warning that tariffs put against China by Trump could impact our trade, just trade in general. So look, we're still sort of unpacking what the change of government will mean in the United States for us here locally and for global economies. So we have lots of content on ausbiz.com.au that I really encourage you to go online and have a look at to help sort of make sense of what this means for not just equities, not just small caps, but also other asset classes and, investment strategy as well. And then Data Surge. So we don't talk about this company a lot, but it's really hard to look through the best performer on the 200 today on a down day, up by 4.5%. HMC Capital has agreed to a $400 million deal for Australian data centers. So it's going to be called DigiCo. It'll be a new REITs. They're spinning out those data centers. We'll get more on that in the corporate stories. Although, here we go. Let's take a look at the evidence of this real severe downturn in the commodities complex, in part because of that Chinese fizzle, in part because we've got strength in the US dollar. But those are very sizable falls coming through, as you can see on your screen, or I will say it if you're listening to the podcast. South 32, I've already mentioned BHP, Rio Tinto, Fortescue. South 32 is down by more than 3%. And Mineral Resources off by 3.5%. I had a great conversation with Andrew Dale from ECP Investment Management, or Asset Management, I think it is, earlier today. He was talking about Mineral Resources. And he's quite happy that Chris Ellison will be staying as that transition for the next 18 months. And we just spoke with Helen Bird from Swinburne University, if you want to take a listen to that. She's a corporate governance sector specialist, I should say, and so she weighs in on Mineral Resources. That's online. We are looking at the consumer staples. Endeavour Group, that is a record low. A2 Milk off by 6.8%. Treasury Wine down by 4.3% to $11.01. Now, we have been at the UBS Australasia Investment Conference today. Just reminded me that we did speak with their Australian banking analyst, Mr. Story, and he tells us the story of the banks and where he sees them headed. Don't forget, we still do have a quarterly update coming from Commonwealth Bank. ANZ got a bit of a broker upgrade coming through. Actually, it was a downgrade to neutral, only because of its share price appreciation, though. So we'll get there in perhaps just a moment. So there's the banks. Westpac down by 0.6%. CBA off by 0.25%, and Macquarie down by 0.3%. But you'll want to go online and find that interview. We've got a whole series of them from that UBS Australasia Investment Conference today. Juliet Sally, my colleague, was there, and she'll be there tomorrow as well. So looking forward to all of those insights. We spoke with their chief economist here in Australia and New Zealand. And we also spoke with IBET Energy. That was right. So yeah, lots of good content online. But to some of these top stories, Endeavour Group hitting that record low to $4.51, off by 22 cents, as its group sales and growth missed estimates. Incitec Pivot's more definitive plans to separate its fertilizers arm has been received well, even as it recorded an annual loss on that fertilizers write-down. Shares are higher by 2 cents. There's HMC Capital listing data center trust worth, that $400 million mark, hitting record high. Resolute Mining, this is a pretty nerve-wracking story for all those involved, off by 32%. CEO and a couple other executives have been detained in Mali. They were there to negotiate with the government. That is sovereign risk at its worst. And Silk Logistics, so a bit of M&A on this Monday. Silk Logistics, best day ever, up by close to 44% on a takeover plan by DP World, that's private equity. Genesis Capital has sweetened its bid for Pacific Smiles, shares up by 4.4%. Meanwhile, PointsBet has denied media speculation that it's in takeover talks, and its shares are up by 9.3%. Perhaps where there's smoke, there's fire. And then a deal has been done between Novonix and Stellantis, the car maker, so it will be supplying synthetic graphite to the company. Clarity Pharma has jumped on a deal with US-based firm Nucleus Radiopharma to produce its drug for the imaging and treatment of prostate cancer, and shares in Clarity, CU6, up by 2.6%. And Infomedia, terrible day, down by close to 12% on cutting its FY25 earnings forecast. It's an interesting one that flew under the radar. CBA entered an agreement with LGT Crestone over its personal advice business, so LGT will be taking that over. REA gained. UBS lifted its price target and upgraded its outlook post that Q1 result. APA Group, though, dropped as Macquarie trims its price target. And Citi has lifted its price target for Aristocrat, retained its buy rating, and Aristocrat up by 1.9%. But going back to the beginning, the stock of the day was Endeavour. We spoke with Mark Gardner from MPC Markets and David Lane from Ord Minnett. Let's listen to what they had to say.
I think it's starting to get attractive. If you're an income investor on a long-term basis, this probably interests you. If you're a growth investor, I think you've probably got 50 other options you probably should consider first. But,
sure.
But I mean, getting growth, getting yield at that reasonable price where it's, there's not going to be too much more downside. I think, this sort of level here at the moment is fairly reasonable value.
Disappointing as far as the result is concerned, and the market's obviously been disappointed, selling it down about 5%. Broadly, we've currently got a hold recommendation on Endeavour, target price of $5.10, so they're currently trading around $4.50. There's a little bit of upside on our current target price, and as Mark said, it's a reasonable dividend yield of about 4.7%, fully franked, so it's an okay income.
So that was a buy and nibble from Mark Gardner and a hold from David Lane, in case you missed it. And if you'd like to hear the extended commentary, you can go to ausbiz.com.au. It's a part of our series, and you can check out all of the stocks of the day. Okay, let's get some analysis now, shall we? Welcome back to the COB on this Monday afternoon. Josh Gilbert from eToro. Josh, boy, those are some punchy falls that we saw for the big miners.
Yeah, absolutely. Not a great way to start Monday, Nadine. Look, I think it's just a bit of disappointment coming from China. I think we always sort of felt that this could happen, especially after we had, a fair bit of positivity coming from China, just a month ago or so. We kind of felt they had to back that up. And again, there was a lot of optimism around that time. But we felt that it had to sort of continue. It wasn't going to be sort of a one rollout and done type thing. It needed to be a continuous sort of effort really to sort of continue to support the assets that have struggled for a long time, and particularly now with sort of Trump getting in at the same time, that's a pretty big negative for China, more broadly. So I think really the sort of the pullback that we've seen in the miners and sort of in Asian markets sort of underscores that there is a bit of disappointment that came from that package. Really, we expected a bit more. We didn't really get that sort of stimulus to sort of really bolster consumption, and obviously we had that sort of weak inflation data at the same time. So look, not positive. You sort of mentioned it right at the top there. There is that sort of murmuring that we might sort of have China waiting, until Trump really takes the office to sort of roll out a package, given that there is a bit of an uncertain outlook for the economic measures in China given his presidency. So maybe they're holding it back, but again, the market hasn't liked that they haven't given us anything after trickling out a little bit over the last sort of month or so, and continues to be this sort of stop-start with China. And really, as an investor, you're not going to sort of want to put capital there. As reading earlier that we've seen some continued outflows from corporate businesses from China over the last sort of month as well, just going to show the uncertainty. That outlook just isn't really exciting for investors at the moment. There's a lot of opportunities elsewhere, particularly in America around AI, lots of opportunities, and China just isn't offering an attractive, compelling investment case for investors right now.
Yeah, and I mean, I started with what was pushing us lower, but I failed to mention, even in my intro, my preamble, which was probably a ramble, that IT stocks here have hit record highs. So, Xero, WiseTech up between 1.5%, 2.5%, really following that U.S. market higher, because it really has. Well, I mean, what hasn't been going well in the States since the outcome of the election?
Yeah, I mean, what a week it was. Obviously, the best week of the year, best sort of day for the S&P 500 on sort of the post-election day ever. So really, really positive in that sort of sense. I think really, again, a lot of what we're seeing maybe from investors, particularly eToro, is, which I always sort of find quite interesting, is we tend to sort of see that investors want to sort of try and maybe front run policy. They want to sort of try and get ahead of what's going to be the next sort of big thing. And what's quite interesting is if we look back over the years, that's not always been sort of the best idea. It's always good to sort of come back to those sort of fundamentals. Politics does obviously play a part, but the sort of the fundamentals of are what drives markets. And I think if we go back to sort of, again, looking at sort of earnings, the S&P 8% year over year in Q3, that's well above the 3% that's expected, continuing to deliver on that sense. GDP growth in the US remains strong. Again, we get inflation data this week that may sort of pick up, and there's a bit of worry over Trump getting in, but bottom line, the fundamentals remain pretty solid. And until that changes, we sort of see this bull market sort of continuing to move forward and continuing to sort of chug along, driven by tech and this sort of AI boom that isn't slowing down.
Yeah, and I mean, we saw, data centers, that HMC Capital, probably not something, heavily traded on the eToro platform. We don't talk about it a lot, but hitting that record high. I got a few different numbers around the size of this delisting, or IPO, but I've got $4 billion in front of me coming from Refinitiv. Those are the big themes. Has Bitcoin been going off on the eToro platform?
Yeah, look, it has. It's obviously an asset obviously being a sort of a social platform, we definitely have seen that interest pick up. We're seeing, users discuss the asset a lot more. I still think, though, we're really not back to where that sort of we've had that retail euphoria. We're sort of sat at around about $81,000, which is a huge number, closing in on six figures ultimately. But I still don't think we've had that euphoria that we have had in previous cycles. Being involved with crypto since sort of 2015, 2016, that euphoria we had in 2017 when we first had that bull run, that 2021 euphoria that we had as well, we're just not quite there. I still think that there is the potential for that to sort of come through. We believe a lot of this has been driven by institutional appetite. Now, if we look at sort of the Bitcoin ETFs last week, the IBIT ETF had record daily inflows, billions of dollars flowing into the asset. And I think, this could be the start of that retail interest coming back. And it always can come from, little things. I had a text from a friend this morning saying, so Bitcoin, is it time that I own this? So it does sort of come from that time. We've been talking about this asset for many, many years, but it's sometimes not until it maybe hits that mainstream media. It's not until maybe, everyone starts discussing a little bit more that we get that retail interest back. And I think that is really important, because when we do maybe see retail come back in a much bigger way, when we're in sort of price discovery as we are now, I think that gives the momentum to Bitcoin to sort of keep driving higher and push towards sort of six figures. And, we've not even got Trump in the Oval Office yet either. So there's a lot, I think, that is making for a strong run for Bitcoin at the moment. We are set at record highs, but I think that it does feel like this rally is just sort of getting started. This bull market, I think, has a lot of weight behind it. And I don't think we've seen the end for Bitcoin just yet.
Well, all right. I have some friends that are quite excited right now as well. Josh, retailers in the U.S., not only do we get the retail sales data, because don't forget we are still very data dependent and it's still all about rates as well, but that, Walmart and I think it's Home Depot this week that come. I mean, these are always really important gauges of consumer sentiment and consumer confidence there. And as they voted, apparently Main Street's not feeling too good.
Yeah. Well, look, we also, we get Disney's numbers
Disney
as
well.
Yeah, I always like looking at sort of Disney as well, because it gives you an idea of that entertainment side of the business. It gives us a look into if people are still going out, spending that sort of discretionary cash, but also on the streaming side as well. Again, we look at Netflix for those types of things also. But yeah, the retailers are really where we're going to sort of look towards to see that spending. US retail sales data are going to be really important as well. Look, so far we know that sort of consumers are continuing to hold up. I think really what we're going to be looking at from Disney and from those other sort of retailers is, are we going to start to see a little bit more positivity coming from their commentary, particularly if rates are going to start to come down? That's going to be really important. We're starting to obviously had that massive 50 basis point cut. We've already had another cut, expecting another cut in December as well. So is that sort of starting to flow through? Will that start to see positive commentary coming from management teams moving forward? We would like to think so. That's obviously going to be a big win for US sort of consumers, and therefore that should sort of bode well for retailers. But again, still a bit of a mixed outlook. That may have that inflation number pick up again this week. So yeah, those retailers are always a good idea or a good look into how consumers are feeling. So.
All right. Well, Josh, you've given us something to look forward to as well. So thank you so much for joining us today. Have a good one.
My pleasure.
Take care. Just while I've got you here, you all listening or watching, I would love to get you to register for our next virtual investor event. It's called Cyber Monday. Why? Because we're talking about stocks on sale, of course. So we have a great lineup of expert guests who will be talking about equities that they say are undervalued and offer significant upside. So it's the right time of year to be doing this. And as I've said, we've got some great experts lined up with some really brilliant ideas. Monday, the 2nd of December, 11 a.m. You can watch it live. You can watch it on demand. You register at ausbiz.co/cyber, CYBER. And of course, it's free. Let's get across some of these market leaders. Look no further than HMC Capital. So having a really great day on news that it will be spinning out its data center business. I mean, this is the theme, isn't it? It's AI, but everything AI requires data centers. And if you've got some time, I had a chance to speak with Anirban Mahanti a little bit earlier on. I think he's from Alpha Plus. Haven't had a chance to speak with him, Alpha Target, sorry. Haven't had a chance to speak with him for a while, but he talks about his #1 AI winner globally, and just about this data center AI theme as well. And I think that feeds into Megaport. Megaport was up by 4%. Zip also doing very well. Genesis Minerals, it is producing. So it's drill resort support accelerated production growth strategy. We've got a call in with the company. Shares are up by 3.3%, hoping to get them in. James Hardy, lots of enthusiasm about its opportunity in the United States, up by 3%. And WiseTech, there was a bit of a buying opportunity, I guess, a couple of weeks ago, up by 3% or pretty close to it because of this tech rally that we're seeing around the globe. Here is a look at the laggards, though, and we've got Champion Iron, which is down by close to 10%. It, though, is trading ex-dividend. Aluka's down, Fortescue, A2 Milk, and Deterra. So you can see coming to the fore the pressure that we're seeing on resources, on iron ore, and A2 Milk related to China consumer as well. Okay, small to mid-cap space. I'll whip through this. We talked about the M&A for Silk Logistics looking good, up by close to 44%. Flipping the page to some of the worst performers in the gold space. Kingsgate consolidated off by 11%. And Arcticor off by 10. Used to be Redbubble. Okay, so we have bond markets closed tonight for the U.S. Veterans Day federal holiday. So we will be looking to the day ahead. Tomorrow we get the NAB Monthly Business Confidence Survey, the Westpac Consumer Confidence Survey. GQG Partners again came up in my conversation with Andrew Dale. He loves this stock, calls it great quality. It will trade ex-dividend though tomorrow. We've got Kohl's, Lifestyle Communities, Nanosonics, Platinum Asset Management, Star, all holding their AGMs. And we get a bit of data out of Japan as well. Okay, so where'd we finish? Here is the question. That is the CIBO Australia Index. I'm just looking at the S&P ASX 200 now because it stays open for a little bit longer as some of those trades go through at the end of the day. It is sitting down by 0.3, so close to 0.4%. So a bit better performance than what you're seeing there with the CIBO Australia Index. It's sitting at 8,266 E-minis. Both NASDAQ and S&P 500 E-minis are higher in the US, and we've got Bitcoin above that $81,000 level, still seeing some pressure coming through on oil. All right, that is the day here on AusBiz and the COB. If you're listening or watching, I really encourage you to go to ausbiz.com.au and check out some of those interviews that I was name dropping, and there are plenty more besides. Something up your alley if you like asset allocation, if you like investment strategy, if you like stock picks. Always worth a visit. And with that having been said, we'll see you at 9:45 when we're live tomorrow.